Today's big question: the Fed or the merge? Crypto prices took a tumble after a higher than expected consumer inflation reading in the United States. So what should be highest on crypto investors' minds? What's next from the Fed, or how markets might react to the merge? We'll also take a deep dive into how conversations among crypto regulators are being shaped. According to current forecasts, there are less than 24 hours to go until the merge. However, while it is, of course, a big deal, it's certainly not the biggest thing markets are concerned with today. The crypto top 10 was a sea of red at 11:30 a.m. Hong Kong time on Wednesday after August's US CPI data came in higher than expected overnight. So what should crypto investors really be keeping a watch on? Forkast Lachlan Keller reports.
The market had expected a 0.1% decline in inflation from July, but instead, Tuesday's report from the US Bureau of Labor Statistics showed a 0.1% increase. And while gas prices showed a welcome fall, that was offset by an 11.4% year-on-year increase in food prices. That's the largest 12-month increase since May 1979. Justin Danathan of Amber Group says he's not surprised markets across the board are hurting.
Inflation is still definitely red hot, and so risk assets suffer. Why? Because the expectation is that the Fed will continue to raise rates in order to fight off inflation. And so as you have rates rising, risk assets across the board, equity, stocks, real estate, crypto, go down.
Many had been expecting the Fed to raise interest rates by 75 basis points at its upcoming meeting on September 20th and 21st. However, according to the CME FedWatch tool, the likelihood of a 100 basis point hike has risen to 35%, and Danathan sees more pain ahead.
Unless you see a clear shift, fundamentally the path of least resistance is down, right? So as long as we don't see inflation come down or at least stagnate, there's probably not going to be a shift from central banks in terms of monetary policy, rate hikes, and so on. And so because that's happening, risk assets will continue to suffer.
But of course, the Fed meeting isn't all we're waiting on.
It's a very interesting time for the merge to happen because, of course, you've got this entire macro narrative which is kind of weighing on risk assets. And then you have the merge, which presumably should be a very bullish or a very enthusiastic moment for crypto investors. Now, the question that I don't have an answer to is, will the narrative of the merge be strong enough to push prices up despite the kind of bearish environment you have across risk assets in the macro environment? The interesting thing, but I'm not making a prediction here, is you might essentially have a short squeeze. Meaning a lot of people are bearish for a lot of different reasons and start to sell ETH and start to be short ETH. And then because there's enough buying pressure, it could actually explode to the upside because all those shorts would be liquidated. I'm not saying that will happen, but it's an interesting scenario to keep in mind. I'm still broadly bullish on Ethereum. The timeline itself, that remains to be seen, and again there's a lot of variables here, so I wouldn't try to predict it for the next few weeks or months.
In fact, Danathan says it's very important to look beyond some of the hype around the merge.
I think there's a lot of myth about the merge and what it means for gas fees or the number of transactions per block, which actually wouldn't really be affected, but it's more about the energy consumption. So the merge will be the first step into transitioning in real terms from proof of work to proof of stake. And so that means that the consensus mechanism will not require a lot of computing powers to resolve complicated equation or computationally intensive computations, but will simply require validators to stake assets. It will also change quite a lot of dynamic with regards to the yield you can earn by staking your ETH. I mean, you can already do that, but you don't have access to those staked ETH. So a lot of things are changing, but this is just the first step. So I think it's very important for investors to see through all the hype and understand that this isn't the end game.
As they say, patience is a virtue. I'm Lachlan Keller, Forkast.
Buying a luxury property in Dubai or a Gucci bag or even paying your phone bill, crypto's got you covered. There's no denying that crypto has gone mainstream. However, as digital currencies become far more commonly used and accepted, regulators have had to sit up and pay heed. So what exactly are the regulators doing about crypto? What are they getting right and what are they missing? Let's get in Marta Belcher of Filecoin Foundation to talk about all this and more. Marta, many people seem to think of crypto as the wild, wild west, a vast unknown outpost that's a free-for-all. How much truth is there in that thinking?
So I think it's a myth that cryptocurrency is not regulated. It's actually the case that the on-ramps and off-ramps where you're buying and selling and hosting your cryptocurrency are actually heavily regulated entities. So they are under the BSA, they're registering with various government agencies, they're complying with know your customer checks, they're opening their doors to annual inspections. So these are actually really heavily regulated entities. So I think it's really a myth that cryptocurrency is not in fact regulated. I also think that one of the things that's really important about regulation is that what we do is regulate activities and not technologies. So just to give you an example, if you are committing fraud, it doesn't matter what technology you're using to commit fraud, right? You could be committing fraud using cryptocurrency or a pen and paper or a computer or email. It doesn't matter. What matters is that you're committing fraud and the government can go after you for that, right? And so I think importantly, we already have regulations that we can and do sensibly apply to cryptocurrency. So in general, I think really it's a myth that cryptocurrency is unregulated.
Well, since we are talking about regulations and regulators, I'd like to bring up Tornado Cash. The sanction and arrests linked to the crypto mixer has people worried not only about what's happened, but about the precedent it sets.
So what we've seen recently is we've had OFAC actually sanction Tornado Cash, which is a mixer. And this is a technology that is intended to basically make transactions anonymous. And to protect people's privacy and allow them to transact anonymously, just like they would transact with cash, right? So just how like I can hand you a $10 bill and that transaction can happen anonymously, what Tornado Cash is doing as a mixer is allowing you to have that same kind of transaction happen anonymously, but do it online. So it's really importing the civil liberties benefits of cash into the online world. And the reason that that's important is because privacy and anonymity are actually absolutely essential to our civil liberties. So I think one of the main issues here is you have OFAC positioning this as though technologies that enhance anonymity and protect privacy are bad or problematic. But actually, anonymity and privacy are not bad and are not illegal and are essential for civil liberties. And so I think in addition to that, you have a major problem of an entire technology being sanctioned as opposed to specific individuals, which poses all sorts of problems and is definitely something that is not, really doesn't have precedent and frankly is probably not actually allowable. That in and of itself is a problem. You also have major Fourth Amendment problems, and also in the United States you have First Amendment problems, because what you're really seeing is developers of this technology who are writing code, right, being potentially on the line for literally writing code, which is actually protected as speech in the United States.
And before we let you go, Marta, tell us about how Filecoin is helping shape these regulatory conversations.
So the thing that is so great about Filecoin from a regulatory perspective is that it really showcases the very cool things that you can do using cryptocurrency technology, and specifically using the ability to program your money. And what that means is that you can actually show members of Congress or other policymakers, here's actually how you can use this technology to build the next generation of the web. And here's why cryptocurrency is actually useful and is about way more than just investing money. Here's why this technology can really be the basis for the next generation of the web. And I think telling that story is really important for making sure that we get policymakers to understand this technology and its really powerful potential uses.
Marta, thanks so much for joining us today, and we are definitely looking forward to hearing more from you at Phil Singapore 22 Summit, which kicks off on September 26th, right here in Forkast's backyard. NFTs have become ubiquitous, but they are a lot more than just a picture. They are a way to prove provenance, secure authenticity, and a whole lot more. And Artifact Labs, which originated within the realms of one of Hong Kong's oldest newspapers, SCMP, is using NFTs to preserve Asia's historic moments. Forkast Editor-in-Chief Angie Lau sits down with Gary Liu, founder of Artifact Labs, to talk about all this and more in the latest edition of Word on the Block.
That was where the project began. It was about metadata. It was about creating a standard universally co-created, by the way, with art curators and auctioneers, with archivists around the world, with think tank leaders, and of course with blockchain technologists and experts. The goal was to create a universal standard that not only the South China Morning Post could use, but other news organizations, historical institutions, and cultural institutions can use to tokenize, as we say in this world, their assets, effectively take historical archives, make them into NFTs, and eventually, hopefully, build a new business model out of it. And in doing so, help preserve our collective human history on chain.
Make sure you catch the full show. That's out on Monday, the 19th of September. Alright, that's it from us. Like and subscribe to this video for more content like it. Let us know your thoughts on what's happening in the comments.